Good morning, video morning brief of the U.S. stock market. I'm Rich Potts for Critical Point. It's Monday, March 10, 8:10 a.m. Eastern Time. All right, let's go right to the snapshot first here quickly. Mixed picture for the level 4 interweek to intraday swings. The model suggesting a level 4 bottom could have occurred on March 7th, okay? And immediately went to a top March 7th. That is allowed, very brief. And if so, it's down today, up tomorrow. Now, there's an alternate scenario saying really the level 4 bottom was March 6th, the top was March 7th. The low of March 7th was a clue that it wants to go down overall, and it's starting to do that again, that they just had a blip up to finish the week off. Now they're right back to what they've been doing for a couple of weeks now, sell, 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 with occasional intraday, interweek blips higher, okay? If that's the case, the market can actually bottom this morning instead of towards the end of the day, early tomorrow, and is still due for at least a blip up by tomorrow for level 4 and could even take a little bit, stay up a little bit longer than that. So at least both scenarios or model scripts suggest higher tomorrow. It's just a debate of when does it turn up. Is it from this morning or sometime during the day or towards the end of the day, or doesn't it may not start till tomorrow morning? The cash may be down today, but up tomorrow, whereas the futures were down today, down some of overnight, and then up tomorrow. So just stay focused that it's probably up by tomorrow. And I think if the futures start trading above 57.75, I think it's a positive development. If it does it today, that's a positive development. The level 4 interweek swing is up. In the meantime, though, we have to be concerned that it's down 55 points and they opened it lower last night. That is weird for the futures market. Rather bearish sign, but it can also be a sign the market is going to bounce to fill that gap. They could be trying to test the market, see how bearish it is. All right, see if somebody swoops in there this morning and buys it. I don't trust this gap lower as a bearish sign. I think the market is trying to become stable around the 200-day moving average for the S&P 500 and NASDAQ. The Dow Jones, I don't think, is quite down to the 200-day average. It may have a little weakness there. As far as additional downside, however, we have to consider back to Friday's low, 56.73. We have to consider the next move might be 56.26, okay? So difficult to say what do you do with this right now, because it's almost like for the level 4, it's possible it's already too late to sell. It's down too much. Larger trends, however, this market just may continue to drop. So for larger trends, we're looking for a level 3 bottom, may have been placed Friday. There may not be a level 3 bottom this week. It's just down, down, down. So it's very difficult to come up with a monthly buy signal. It's very difficult to come up with a monthly sell signal, okay? There is the potential to rally this up to 58.50 to all the way 59.50 if a standard level 3 would work. But we're not finding any evidence. It's very mixed. It's very confusing. And why? Because investors are confused, but they are willing to err on the side of when in doubt, sell it. They are frustrated with Trump changing his mind every hour, every day, and it's also his team changes their mind, and his team is even at odds with Trump himself at times, and then at times they're on the same page. And then we have the global issues with tariffs with Canada, Mexico, China. We have China that their inflation went to minus, okay, for the first time in years, so a few years at least. And that's concerning that their economy is still slipping, their stimulus isn't working, they aren't moving fast enough, aggressive enough, okay? And then there's European issues, not only with the war, Russia-Ukraine, and the optimism of rebuilding their economies because they're going to build a military-type economy. There's also issues, though, that they have other complications that it can mean a bad time for Europe anyways. And so everything is vulnerable. Everything is very sensitive here. Anything can break down and become worse. This morning, there was a group of economists that had a consensus, no recession's coming. But over the weekend, Trump even said, you might as well prepare for a recession. It can happen. And he was basically saying he's not going to change anything, even if it causes a recession. That's just part of the price we pay to do what they're going to do. All right. I think we're vulnerable to a secondary recession, not a true or primary recession. That means it'll just slip under the radar screen, and economists and government will say no recession, but they may not wake up to that till well after the recession has come and gone, okay? And it also depends whether the Fed wants to help out, put the brakes on, lower rates. The bond market's trying to lower rates and help out, and the bond market is worried about a recession, okay? So now, on the other side of the coin is we actually still have a strong economy. Economy's growing quite well. It is slipping from when Biden, and it's slipping mostly because of Trump, because people were backing off before the election. They backed off more after the election, even though some of the polls said they were a little bit optimistic for a while. Now most of the polls are saying they're not optimistic about Trump. So it's just been getting worse. It's been a process, and that's why the stock market moved sideways December, Jan, even into February, as it was trying to figure this out, and it finally figured out it looks like things are more negative than positive and gave in, okay? All right, I don't know if I have anything on this 60-minute chart. Let me take a quick look here. I didn't update anything. I'm looking at my notes. I am pleased with these three price levels that worked for bottoming. They could have worked better. They started out working very well and then not so well. But considering them on the way down, 57.43, 57.16, 56.89, even though we're going to open quite a bit lower, though, if they bring it back up, those could be levels of where they stop buying and actually start selling again. Those can be resistance levels, so watch out for that, okay? We still have a gap up at 58.20 that's probably going to get filled someday, somehow, some way. Right at the moment, it doesn't look like it's today. We're going to have a large gap to the downside and probably too large of a gap. Let's go to the daily chart, and we'll go to the S&P 500, get cash, get some history. And last week, they had problems flirting with the 40-day moving average, put it down to the 200-day average, flirted with that for a while, closed it above it, positive sign, but this morning they're going to open much lower. By the way, if we calculate from the record high to the recent low, Friday's low, the market's down minus 7.81% or so. I might have not drawn it that accurate. And that means we've met my minimum requirements for a setback this year relative to level ones, relative to a chance to come into a minor long-term bottom. Now, the problem is I don't think the best level one, though a level one bottom could occur in the next few weeks here. Ideally, it does occur to May, June, July. So I'm nervous that this is just a level two. What this may mean is we get a very nice rally. If we could bottom now in the next week or two around this price level, they may rally it all the way back to towards 6,000, only put it down and lower still by May, June, July. And we may need 10, 11, 13% down in the S&P 500 after all right? Dow Jones cash has not come down to its 200-day moving average. It has come in with my target. I'm pleased with that. It may have done enough. It is oversold. It can bottom now, but the model's favoring a little more weakness here for a few days yet, kind of settle some things out. NASDAQ 100 is below its 200-day average, looking ugly this morning compared to all the other indexes, okay? I'm concerned that's a level 3 bottom and top, or the top was actually there. It was weird. It was a running correction to the downside, a bearish sign. And I'm concerned it's going lower all of this week into next week. It's not going to find the demand near that 200-day average. At the same time, however, do I close my eyes and sell it here? And the model's warning, gosh, they could put the brakes on today, snap it back up some, and then sell it. I guess I'm going to miss out on the downside personally. I'm just going to watch it for a while. But if you can handle the risk, jump in and out, you're nervous of it just falling, it definitely can still do that. And maybe it's worth taking a chance. But I'm concerned it's a little late here on the really short-term stuff. Even if it's going down for a long, long time, it's like it can snap back. Now, this is the S&P 500 futures. It's in a potential price downside target. They flirted with a potential support from an old trend line, okay? It's in the time frame for an alternate scenario for a level 3 bottom, but we've got a big debate, all right? I can move a level 3 bottom from there to there. Top was there, more likely there, running correction bearish. This would suggest, yes, it can bottom today on into the end of this week for another level 3. There's an alternate scenario, however, saying I should move the level 3 to February 28th, and it's saying it should not bottom today. It should bottom a little later this week into early next. It just slides things over by a couple of days. Now, I can also put that level 3 bottom there, and it's almost getting too late. It better have bottomed as of Friday, really. So we might be able to throw that one out if today, tomorrow, they take out Friday's low. So unfortunately, I got more model scripts than I would like, got alternate forecasts than I like. Everybody puts up with this from time to time, no matter their form of analysis. I think the market is definitely bearish, but I also think it's concerned it's come down too fast and needs to take a breather and bounce some. I think it's concerned of where do we go from here? Can I just keep dropping? Or does it move now at a much slower pace and have some nice up moves? Or in fact, is this a buy for a while? And they're all playing multiple chess games here at the same time, trying to leave the door open, be flexible. They're also digging for data ideas. Yet, you look at this trend, it seems obvious, they're just bearish. So they seem to want to sell near the 5-day average. So if they bounce this back up today, tomorrow, sometime this week to the 5-day average, it may be worth selling it yet again. But are they worth selling it below the 5-day average this far? Well, if you look at it, if you take this amount of distance right in here, relative 5-day average, that tells you where they're saying, oops, I don't want to sell it anymore. I'll wait for it to blip back to the 5-day average, and then I'll sell it. So they are getting concerned of a bottom, but when in doubt, they're selling. That's their model. When in doubt, they're selling. All right. Let's zoom out for the weekly chart. Cash, S&P 500, ugly last week, took a nosedive right into the second target, maybe even the third, because you really can include all of this now. Took a dive into these old targets to the upside that are now probably downside targets and maybe a chance for a floor price. All right, but it can still go down to 5640 according to this, as well as all the other numbers I gave you. And it might even yet go down to about 5,600 on into the 5,400s. I have stuff all the way to low to 5,100s, but the lower it goes, the more it could take a lot of time. Some of those lower targets may not show up to May, June, July. This weekly indicator acting quite bearish has moved below the mid-range, has an even wider spread. It's saying chance for lingering near-term downside momentum the next 1 to 3 weeks. Well, the model's saying it's possible it could bottom this week for a level 2, but very unlikely. Better stay with week of March 17th on into the week of April 7th. And I think I've discovered how it can take even a week longer, but the model's saying no. I'm going to stick with it. It's got to go lower into latter half March to first half April. At least it should, okay? But we can have level 3 blips up along the way, and so far the level 3 blips aren't working. They've been that bearish, but it might be time enough now where one could work a little better, give a blip up, and then it just falls back on us, okay? Back down yet again. Dow Jones Industrial still needs to come down here, and I don't think it's down to its 200-day average. Yeah, I showed you. But it's not far from the 200. Maybe it doesn't matter. I don't know. I think we're a couple of weeks or longer away from a decent trader's buy for moves during a year. But until then, this has been so weak, I don't dare go with the attitude, oh, they beat it up so much, we should buy some now anyways. I just don't dare do it. I'm waiting for an important buy, I guess. Now, for very short-term traders, there may be a reason we might get a surprise just how much it could move up this week. But it ought to move down again is the best forecast. And looking at that daily trend right now, I'm concerned it can't pick its head up. I think they're just going to keep selling. It looks like to me, no matter what Trump says, that they'll hesitate, think about it when he said it, and then they just go back to selling. I think there's still more selling coming is my best forecast for you. We just have to play it safe and go that error on that side of things, okay? I think that's the more conservative. Monthly chart looks ugly. VIX is finally waking up, picking up. They are betting on the downside to protect their stocks, even though they're also just liquidating, selling some stocks. Equal weighted index still looks not good. The breadth doesn't look good, okay? So I think we have an issue here that there's more downside coming in the next few weeks. The problem is everything is flaky right this morning. I can't tell you, are they going to start that up move now? Are they going to start it in a few days? How much of an up move will it be? Okay. And I'm trying to find my interest rates now. Will interest rates play a role in this? It looks like it's finally moving up for level 1 and level 2. If it would, the stock market might actually like that, saying, well, maybe the bond market's not so worried about a recession right now. Could do a breather. Same time, it's already down this morning on interest rates. So maybe we don't have a bottom here, okay? Really tricky. Don't mean to waste your time this morning here. There's interesting things to look at and consider, but there's nothing that really sticks out at me. This is what we ought to do. All we can say is the trend is down, and maybe that's a safer thing to say. Wrap it up. Hey, the trend is down, okay? And let's see where we are right now. I have it off 80 points. They're still selling this. Yeah, they're more bearish than I thought. I wish I'd been brave last night when it opened down 40 points. I thought, gee, I ought to sell this thing, you know? All right, at any rate, this is the 6-hour chart. It could be coming down to this trend line, which might yet put support on the Friday's low at 56.73 and around a target of 56.84. I can't quite read that. I don't know. It feels like, yeah, they're bearish. They want to keep selling. They really are concerned about this recession. Yet there's things now working against them that it ought to blip its head up a little bit. And they're trying to figure that out. But I think, again, they're erring on the side, if you can't figure anything out, have some kind of price that you'll sell more, and also have a time stop that if it stays down a certain amount of time, won't pick its head up, sell more. Okay, when in doubt, sell more. I think that's what they're saying. They could change their attitude if the futures come back to 5800, okay? And on the S&P 500 cash, unfortunately, they have to get it back above 5780 or something like that, where they might change their attitude. At the moment, I think they want to sell, and I think they'll sell against the 5-day average. I don't have much hope for this thing, and yet even I don't really want to bet on the downside at this moment here. It's difficult for me to sell here, even though I'm concerned we might even have a miniature 1987 crash where it drops a huge amount in the next 3 weeks, just down, 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 down. I can't prove it. All it is just more of a gut feeling kind of thing. And so we'll give them a chance. But I think ultimately, okay, it's so oversold, it really should bounce. Trend-wise, it's still down. News-wise, nothing has changed. If anything, people are worried. Things are getting worse. And even though some economists are saying we can't have a recession, I got a feeling people won't believe them. Okay? All right, big gap down this morning. Maybe that can create some stability. But again, maybe we can get a bounce this week. But again, I got a feeling there's still lower prices coming yet this month. Past results are not necessarily indicative of future results. Have a great day. Thank you.